It's clear that DeFi is here to stay. And one of the other clear pieces here is also that there is extreme volatility within crypto. Now, what if I told you there was a way to be able to counter that volatility, be able to make gains from that volatility within DeFi specifically, and not have to own any of the underlying assets? Stay tuned to find out more. Welcome back, guys, to another episode of Decentralized Chain. If this is your first time here and you want to learn more about crypto, whether it's news, insights, or analysis, then start now by hitting the subscribe button. And don't forget to hit the bell notification icon so you don't miss any of my upcoming episodes. Now, in today's episode, I'm getting a good feeling. I'm going to be reviewing a project called Project Inverse. It's been generating a fair bit of buzz in the crypto community. And I'm getting the same feeling that I did when I reviewed Ferrum Network back in 2018 before they'd even launched. So let's jump in to Project Inverse. Now, when I look at this project, really it's a way, I think the simple way to look at it is that you're able to pretty much gain from the high volatility that we encounter within DeFi coins. So you're effectively staking against the frequent dips in the market. However, the important thing to note here is that you don't need to own any of the underlying assets that you have in DeFi overall, like, your chain links, your RVs, your compounds. You don't necessarily need to jump in and out of these particular assets in order to be able to gain from the volatility. Now, if we look a bit more into it, I suppose in essence, when we look at the actual project, what I see here is that it is just a smart contract. It's an Ethereum smart contract, and all we're doing is tracking the movements of the popular DeFi coins. And we get to gain yield from these dips in the market, sell-offs basically, via their utility token CIV, which is here. Now, what you're really doing is you're speculating. You're speculating on the short-term volatility of these specific assets and DeFi indexes. Now, looking at the protocol itself, I suppose it consists of three main items. So you've got the flexible vaults, from what I can see. Let's have a look. Flexible vaults, that's right. And from there, the users, from what I can tell, is that you stake ZIV against real-time price movements or select DeFi coins or a basket of coins. And then you also have the fixed vaults, which is similar to the flexible vaults, but I suppose the latter is actually controlled or determined. The percentage drop, by the looks of it, is determined by the actual protocol itself. And I think one of the things that we need to understand is, before you kind of delve into this, what you're really and effectively dealing with here are derivatives more than anything else. And in order to sort of familiarize yourself with that concept, the idea behind the derivative is that it ultimately determines, or it gets its value, its risk, its term structure from the underlying assets. And the concept we have here also, in addition to this, is also put options. But in the traditional sense, with the put options, it's a derivative instrument which gives the holder the right to sell an asset at a specified price, date, and time. But in this case, is fixed to 7 days or 10,080 minutes. That's the kind of difference here. And ultimately, when you're purchasing a put option, it's usually interpreted as a negative sentiment. You're expecting the value to go down, and you tend to generally sort of benefit off that. And here, ultimately the value here is defined by the DeFi assets or the basket of DeFi coins. If we scroll further down, we've also got dynamic swapping. So that's the third component here. And really, it's the ability to be able to swap your Ethereum or USDT into ZIV. Now, what I like is the integration with Web3 browsers, so your MetaMasks of this world. So that therefore you don't really need to send the tokens into the platform itself. You ultimately are your own custodian, which is always good. I'm always a big fan of not having to have your USDT or your Ethereum in a platform which then handles all the swapping here. So you're in control of all of that up until the point that you need to swap. The other bit also is that the component also acts as a staking mechanism, and you should be able to get liquidity. Well, so ultimately what you're going to be doing is you're going to be providing liquidity into the pool and just earn rewards as well. So if you don't even want to use it for the speculation element, actually you can be a liquidity provider here and also earn rewards instead. So that's always a benefit. So it kind of always comes down to your risk and reward appetite more than anything else. Now, when we look at the token, ultimately you've got what I would say is 3 use cases. First, it's a proxy for the underlying assets. Similarly, it's used as part of the inverse gain, which is the whole play into the project name itself. And then lastly, you've got the staking. So you've got 3 core components in terms of what you get from the actual token. Let's dig in a bit more into the actual team behind this project. So if we have a look at the team, where's the teams gone? Right, here we are. So here's the teams, right? So let's have a little look. So we've got Jermaine and we've got Mika, who are the project founders or co-founders. And I'm familiar with the faces already, actually, because I know they've been in the space for a while. They're the founders of TLG Ventures. It's a VC firm focusing on blockchain and blockchain advisory. One thing to bear in mind is that they also helped incubate Ferrum back in the early days, and help bring that to market. So that's always a positive, because if we have a look at where Ferrum is today as a token, I mean, it kind of gives you a bit of an indication of some of the strengths behind the founders of Project Inverse. So let's have a look at the max time of Ferrum. I mean, if anything, from what we can see, look, I mean, Ferrum's steadily been rising and rising and rising, and obviously now it's gone up significantly high. I mean, that's easily a 200x plus, I would say, since conception. So that's always a positive in my books as well when it comes to looking at future projects and what have the founders done in the past, or what have they participated in the past, which is good. And Ferrum is sitting well over a $60 million market cap as it stands today, so that's handy. When I scroll down the list for advisories, I mean, I suppose it's clear to see Ferrum already involved here as well. So it's like favors being paid back almost. So you got Naeem, who's the technical advisor, and Ian, who's the marketing advisor. So you have the Ferrum community behind this project also, and that isn't small either. That has a very successful community that's fully engaged. There's also Ferrum in terms of the foundry, so they also have an incubation side as well. And the other part to mention here is, and what I noticed is that this is also, or Project Inverse is also one of the Ferrum advisory services projects as well. So that's also generating a lot of awareness and a lot of marketing in order to bring awareness to Project Inverse. One of the other things that actually shouts out to me when I scroll down further is that you've got Lester over here, and I'm familiar with who Lester is, but he's also one of the founders of X21 Digital. And interestingly enough, what I like to also do is, when I look at some of these advisors or strategic advisors, is to see kind of what their involvement has also been in the past with other projects. And what I quite like about X21 as well is that they've also been involved in other recent projects. And obviously the past should never be an indication in terms of future price action or just future successfulness of projects. But sometimes, there is a trend in those in terms of looking at what the advisors have been involved in previously and where those projects are today. And so when I look at X21, for example, I know they've been involved with the likes of, I think they've been involved with MahaDAO from what they got here as well. And MahaDAO did, if I can spell it right, MahaDAO did quite well as well, if I recall. Let's go and have a little look at some of these, on the price action from here as well. So MahaDAO, let's have a look over the 180 time period. See, look, I mean, none of these have really tanked. Yeah, they've spiked and they've come up and down, but ultimately they're still well up, significantly up from their listing price. Even though they didn't list at $2.19, I know pre-sales and public sales was much lower. So you know, the fact that it's still maintaining is really good. And I think the other ones they've got in here is also Paid Network. Paid Network generated a lot of buzz recently. Let's have a look. And that's, I think someone was saying that was like well over 200x from where it initially came from pre-sales alone. And you know, Paid Network, once again, that's another one. Let's have a look at the max time period. See, look, we've got a good steady rise, and then now it looks like it's somewhat in accumulation right now. But either way, we're not seeing massive dumps in any of these. And then when I have a look at some of the other projects that these guys are also involved in, advisors, you know, they've got Vortex DeFi, which is another one. You can't even get into Vortex DeFi at this point. I think it's waiting for public sale. And then there's also Dow Ventures. That's another one as well. Once again, you can't get into these in pre-sale. These are all fairly well marketed platforms, you know, ready for IDO as well. And Apollo Network is another one that's coming out soon as well. And you know, that also has a host of people behind it. So I suppose my point here is that when I look at some of these advisors, those are involved, you know, they kind of obviously look like they've backed winners in the past. So I tend to use that as a potential indication of, you know, where their thoughts and feelings are here as well. Now, the other item to note that I noticed on here also is the involvement of Certik. So their smart contracts have also been audited by Certik, which for me is super credible in my opinion. That's always good to have, to know that the smart contract's been audited. And equally important, I mean, it's the roadmap, right? Let's have a look at the roadmap. Where are they right now in terms of where we're heading? So I think development kickstarted back in Q4 2020. From what I know and hear, the team have been busy cracking away at development. Public sale appears to be around the corner. I mean, we've got another 6 weeks until the end of Q1. I suspect it will be before then, though. But you always give yourself a bit of a buffer, right? And then also Q1 appears to be a busy period in general. I mean, beyond the public sale, they're also going to be having their staking launched and also testnet launched before March. So that for me, you know, if they can certainly live up to those deliverables, then for me that's also, you know, a winning item, I suppose. If they launch in Q1 and they can then start delivering these items in Q1, I suspect this will be great price action in terms of the secondary markets. And also, when I look at the actual staking tech, because they've got Ethereum involved, I suspect, I'm pretty certain, well, actually, it almost says it here anyway, which is their staking is on the partner wallet, Unifier. So they're using Ethereum's technology stack, which is tried and tested. And I know that other platforms have used that as well as part of their staking when they're offering staking on their network as well. So that's certainly a successful tech stack that's being used. So that's always handy to have. Now, what we also need to have a look at is really the token sale, right? Let's see what documents, where are the documents around token sales? So I think they had it up here somewhere, right? Let's have a look. Token launch, and we've got documents. Here we are, token metrics. I knew I saw that earlier. Right. So token metrics. This is a key one. Let me see. Can you see everything on my screen? You can. Good. Right. So token metrics. What do we have here? So, you know, let's not kid ourselves here. At the same time, as much as we want to invest in projects that we think will do really well, you know, part of that investing process is to be able to make bank, right? You want to see some returns on your investment, and token metrics is very key as to determining how quickly or how not so quickly you may get returns on your investments, right? Not financial advice, just my opinion of being in this market for a few years now. And my personal view is that this project has all the potential behind it, from the tech concept and certainly the marketing to drive awareness for this. The token sale so far has 90 million token supply, and we're just over a quarter dedicated to the token sale. And the vesting also, in terms of all the tranches that they've got, if we look at, you know, advisors, seed, private round 1 and 2, they've got a decent vesting period where no one's really getting their tokens immediately. And those who have invested early, even though they get the discount, you know, it's being released month by month at a certain percentage rather than everything up front.
So when you look at the advisors, they won't get all of their so the advisors, all their tokens are locked up for the first 3 months by the looks of it, and then they've got 12-month vesting thereafter. So no one's going to be dumping any day soon onto the market, apart from you've got seed sale. And once again, look, the seed sale is also locked up for a month before it even actually gets to be exchanged on the market, and even then it's only 10%, so it's a really small supply, and it's just private 1 and private 2, which also have 20% and 25% respectively being released, and that's vested over 4 months. So it's pretty decent. I mean, it's not, I suppose, from a public sale perspective, private 1 would make a 2x, but then bear in mind they're only going to get 1/5 of the tokens that they've invested. The likelihood is that most will most likely hold on to it. I think the other piece that I like here is the market cap, right? We're starting at $469,000 as a market cap. And that's decent. It's decent because it allows, I'll be honest, it allows speculation. It allows room for price growth as well, right? Because most of the tokens, or when the sort of token supply gets diluted with further tokens, that isn't going to happen for at least 4 weeks, right? So you've got that whole 4 week of price appreciation, and price being driven upwards just because there is a low circulating supply, and the market cap is at $469,800. And also the hard cap is low. It's only 848 that they've raised. So for them to deliver all of this and still do it on a very small budget, I think is pretty impressive. But the one thing that we also need to look at when it comes to economics is seeing where this can potentially go, right? Because we need to speculate in terms of, how high could this go? And whilst there isn't anybody that's directly competing in terms of the way they're doing their time-bound put options, because there's this whole play into it here, even though they are sort of derivatives. The only other two, I suppose, competitors that I could see, semi-competitors, right, that I can see in this space is going to be hedge and synthetics. And I think if we have a look at where hedge is today, let's have a look. So if we go to hedge, I do like the hedge platform. I mentioned it in my airdrops video, actually. Should definitely worth check that out. But hedge, for example, what are we sitting at? Market cap for this one is, where did I find it last time? We've got market cap sitting at just under $165 million, right? And we're launching with a market cap of 469,000. So there's some serious room for growth. I'm not saying that they're going to take over hedge. I'm not saying that they're going to surpass hedge, but they are coming into the derivatives market within DeFi. And, as far as I can see, you've got these two main competitors in this space. So, there's certainly ample space to be able to take some of that market share. I mean, let's have a look at synthetics as well. Synthetics is the other one, right? So if we have a look at synthetics, the number 23, rank 23 token, I mean, this is just over $3.5 billion market cap. Also, so I think you need to kind of look into these plays as well at the same time when you're looking at some of these projects launching, right? Where can they potentially go? So that's my view on and review, I suppose, on Project Inverse. I'm actually very bullish on this project. I'm certain it will fly from when they launch at TGE. So it's definitely a project worth looking out for, seeing whether you can get into it. I know they haven't announced all their public sale details yet. So certainly drop into their TG channel to stay tuned in that, because this one I can see it's already blowing up. I'm seeing a fair bit of marketing being pushed out for this one. Also seeing some of the Uniswap early calls making this one as well. So there you have it, guys. If you like the video, then don't forget to smash the like button. Obviously, if you found value from this video, definitely feel free to subscribe to the channel and drop a comment below. What do you think of this project? Where do you think it's going? Do you like it? Do you not like it? What are your thoughts? Love to hear your feedback. See you on the next one.